it's been a big 2024 for the digital asset space. And now we're going to think about what 2025 has to hold. Welcome back to Crypto Clarified. My name is Benjamin Dean. I'm Director of Strategy for Digital Assets at WisdomTree. Today, we're welcoming back David Duong, who's the Head of Institutional Research at Coinbase. It's a wonderful discussion. You're going to love it. We're going to cover macro. We're going to talk about use cases for digital assets, infrastructure, and the last one, user experience. All very important things. You're going to love it. Before we begin though, US listeners, WisdomTreePrime.com, or you go to the Apple, Android app stores, wherever your purveyor of applications is, go for it. You'll love it. Hit subscribe and share on Spotify, YouTube, wherever you like podcasts, but make sure you subscribe and share, because sharing good information is extremely important in this space, and that's part of the reason we do this. You can find me on the Bird app X at Benjamin Dean. Before we begin, I do need to state the following though. Disclaimer time. To clarify, the views and opinions expressed in this podcast are those of WisdomTree and Coinbase and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment and tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of listener. Please remember, past performance is no indication of future results. All right, let's go to David. Great interview. David Duong, welcome back to Crypto Clarified. It's so nice to see you again.
Oh, it's a pleasure to be here. Thanks, Ben.
Now, you and your team study the digital asset space very closely, and it's rapidly moving. We know that 2024 was a big year. 2025 obviously has to play out. What would be the 4 big topics that you and your team have got your eye on? Because I know you're so close to the space and do excellent work.
No, thanks so much. I really appreciate that. And I know you're just saying that to be kind and be festive, but I'll take it anyway.
No, it's true. I don't make up the rules, David. It's facts are facts.
You are always way too kind, but no, I appreciate that. I will say, yeah, there's a lot in terms of what we've seen this cycle. That's a great setup for 2025. And, obviously I'm optimistic about the space, or I probably wouldn't be working for Coinbase, but I still I'm very realistic about what things, like how the markets change quarter to quarter, and I call it like I see it. Like when things are weak, I often say like, should be defensive, or when I'm constructive about things, I say that. I'm definitely constructive about first quarter of 2025. And a large part of that has to do with the regulatory setup, right? So the first big theme we have is what's happening in terms of the macro roadmap. And that's everything from what we're going to see with monetary policy, how is that going to react to fiscal policy in the US, like how the changes in the crypto ETFs are going to look like, because it's not just about these single name ETFs that are being proposed, but it's also about adding staking. It's about, changing things from like cash to in-kind creations, redemptions of shares, stablecoins. How's that going to look? So I think all of that for me is part of the macro roadmap. Then I would say the next big theme is how are we seeing technology being disrupted by blockchain technology? And that includes how we're kind of shifting away from, I would say more narrative driven markets into more fundamental driven markets. And that means paying attention to like revenues, how prediction markets kind of earning, gaming, how's that kind of shifting, like AI agents with wallets. I mean, like all these things I would say are just massively going to change the game for crypto. And then I would say the last 2 big themes are probably like blockchains, like that the way we kind of still emphasize L1s, that meta game we play between L1s, L2s, and even L3s. How is that kind of shifting? Because there's a lot to kind of look forward to in terms of new L1s are coming out, but there's also like Mega ETH, for example, that's supposed to be highly performant. So I'd love to kind of like unpack that. And then the last big theme is how is the user experience going to change for crypto at large? And that really incorporates decentralized identity. We have things like ENS, and Coinbase verifications uses ENS to kind of verify and do KYC AML on their users, which also kind of plays into like the DeFi resurgence we're seeing as more TradFi participants are able to kind of come into the space. And just broadly overall, like smart wallets and account abstraction. I mean, that's changing the way we're going to see adoption for the space.
Well, we're going to have an excellent discussion today, and I'm looking forward to the last point in particular, because I'm a nerd. Let's talk macro, because what's kind of interesting that's occurring right now is what's almost it is a rotation in markets, right? Interest rates in large industrialized economies are going down. That means that people turn out of T-bills, for instance, right? They could be US T-bills, they could be other T-bills, it doesn't matter. The point is that they're rotating out, right? So we're watching now as many of these cryptocurrencies, digital assets, whatever, they're at all-time highs at the moment. And this is somewhat interesting. How do you think about the macro side, and what you think could play out in the coming year, given this rotation in markets?
Yeah, this is a very dynamic part of our thesis. And of course, a lot depends on what the new administration is going to do in terms of tariffs and debt and cutting taxes, deregulation, even what they're going to do in terms of immigration, because that's going to affect the labor market and what affects how the Fed could kind of perceive what they need to do, because one of their goals is maximum employment. And
It's one of
achieve,
two goals, right? One
yeah,
is
the
inflation
Fed's mandate
targeting, and
is
the other is
maximum
employment.
employment, and the other one is inflation targeting, exactly. And if there's a need for more people to fill jobs because we don't have enough immigrants to kind of fill those roles, that's going to change how the Fed kind of perceives things as well. So I mean, there's a lot there, and we're not even sure whether we're going to see Trump follow through on the things on day one as well.
Well, let's zero in on that, right? So the macro people have told me for a number of years, interest rates go up, Bitcoin dead, right? And Bitcoin doesn't die, right?
Right.
Now, how does that, what's the link there between macro environment, and you're talking about the US, right? The People's Bank of China is like a totally other thing. So is the Indian Central Bank. Um, how does that link to crypto markets, we could call them maybe, or like Bitcoin, Ether, and Solana, and so on, right? Like, where's the link there?
Yeah, I think it often comes from the same concept that people have about gold, because gold doesn't have any
Ah,
cash flows attached to it. But when interest rates start to go up, um, and you have things that do have cash flows or do pay out, for example, or like bonds, for example, where like you can lock in more attractive yield, that proportionally looks a lot more interesting from an investment point of view compared to trying to buy an asset like gold. And Bitcoin has elements of that, except it's not always a perfect analog, because what frustrates me is people often kind of say, well, like Bitcoin's just digital gold. I'm like, well, no, it's not. Like Bitcoin
it's
is a network,
it's
and
better than gold.
right. But like why I think Bitcoin's better than gold is different from why other people think it's better than gold. Like
Yeah.
there's definitely elements I find
Well,
very seductive, because like it's fungible, it's digital, so it's not like
can
I have
you
to like.
send gold? So I don't mean to. I always do this, interrupting people. Like, but you can't send gold from one side of the planet to the other in inverted commas
Yeah.
without like a serious amount of effort, right? But you can do it on the distributed network. So I'm linking to your point there, but like
No,
that's what's going on.
it's a huge point, especially in a world where we've seen and this is not new, but like more sanctions on sovereign countries, for example, who
Yep.
don't have access to U.S. bank accounts or other things now. And we don't have to debate like the cheap political ramifications of that or why that kind of was involved. But like even if central banks in other countries wanted to buy gold, which they have been doing over the course of the last
Oh,
2 years,
some of
um,
them.
right. But like, I mean, I used to work at HSBC, which sat on a stockpile of gold under our building. And I'm like, even if you want to buy gold and you find the buyer to do it, you got to like ship that gold over in order otherwise you have to like, pay a company in the US to custody that. And you don't know whether you're going to have access to it. Whereas you don't have those problems with Bitcoin. But the other factor is like Bitcoin, you actually get exposure to growth in a way you do not get with gold because Bitcoin
Oh,
is a growing network. More people use it, more people kind of like rely on it to like transfer things. And, like people think, well, it's just about transferring Bitcoin. I'm like, well, that network theoretically can carry anything. We've seen that with ordinals, for example, in BRC20s. But like, more people are trying to explore whether we can do it with stable coins, for example, or other things.
ah,
So there's opportunities that you have with Bitcoin that you just do not have with gold.
yeah. I mean, you're talking about Metcalfe's law, right? And Schelling points and things. It's cool. Like, we could go even deeper into that. But what you just touched on the word stablecoin.
Yeah,
Now, that is interesting. Stablecoins now at 200 billion US dollars equivalent. Um, and that's just the US dollar ones, not like the gold ones and things. But what's going on there? And I think this touches on your second point, which is around use cases. Because people have told me for years, oh, who uses the network for anything, right? But
right,
it turns out that the volume of stable coins, US dollar tokens for the most part, now surpasses in terms of volume per year Visa and MasterCard. Now, people don't believe me when I say this. I point
right.
them at the data.
Yeah.
Where do you see these kind of, we might call them real use cases or like how people are using the networks?
Yeah.
Where do you sit on that? What do you think?
So yeah, the market cap, as you mentioned, has up by 50% over the course of this year alone. And um, like there's a lot of commentary about how much that's going to grow because we've seen projections from like Bernstein or like Jeremy Allaire Circle that this can go to like $3 trillion. And question is, how realistic is that? And like to be fair, they say that's over the course of 5 years. That's not that far off. I mean, like the idea that like the M2 like money supply in the US is $21 trillion. Like right now, we're like less than 1% of that like M2 money supply. $3 trillion is like 14%. That's first of all like not like that crazy. Like it's totally doable over the next 5 years. And we're seeing now that there's a lot more political buy-in to this. Like former House Speaker Paul Ryan, for example, has commented about how like he sees that this could be a solution to the U.S. like debt problem in terms of like this being one of the largest buyers. I think it's the 18th largest buyer of U.S. Treasuries as a sector. So, I mean, these things are massive. But as you say, like transactions, I mean, that's really where the rubber meets the road, right? Because when we're talking
Mhm.
about how like stablecoins are the killer app of crypto, I mean, like a big part of that is that it has product market fit because there are many places where like they need access to the dollar or they kind of want use of a digital dollar for whatever reason because remittance costs are still pretty expensive. They've gone down over the last 15 years, but there's still something like 6.5% on transferring $200. Like you can do it on stable coins for like 0.5%, like 50 basis points if you're in a TradFi world. So it's super cheap to actually do this.
I'm
I
not.
know, like a lot of
I'm
people
not.
are nervous when I say that. I still use basis points because that's what I'm used to. But
No, no, no.
like point
It's
five percent
accurate.
compared to
It's
six
accurate.
percent. So it's massive. But we saw over the course of 2024 that we've done around like 20, like we've settled around $27 trillion worth of transactions with stablecoins, which is 3x over what we did in 2023 over the same period.
Really?
And it is massive. and that's
Huh.
just for USDC, USDT, USDP, PEEPI, USD, and DAI. But like Visa has a really good way to kind of track the quote unquote like organic activity that we see on chain using stablecoins. Because Visa's in this game. I mean, a lot of the big players, by the way, are all in this game.
Oh,
Like,
I wouldn't know. My ex-boss 10 years ago may or may not have been the chair of the board of Mastercard. And
yeah,
I wouldn't know.
they're
It's
all
been
of
happening
them. They're all trying
for
to figure it out, like
decades.
Mastercard, Visa, PayPal, like everyone, because like the traditional ways we transmit money is like ACH or like credit cards, all this kind of stuff. Everyone's trying to figure out. They all realize now that this is a better way. These are easier rails that reduce intermediaries, reduce. I don't have to tell you the answer, like but it's a better rail. But like Visa says that organic activity, which means that they exclude bots or like centralized exchange transfers, still amounted to like $5 trillion over the course of 2024. Like it's insane. Like it's settling so much transaction on top of it.
Now, David, do you know about the history of Western Union and how Western Union started?
No, tell me.
All right. Western Union started as a telegram company, right? And they basically telegrams, messages being communicated through their network. And what they discovered was that one of the most important things that people wanted was to transmit messages in order to send money in inverted commas. So money's deposited at one end, telegram goes along rail line, comes out other end. This person's allowed to have money, and then money is withdrawn, right? Western Union's been around for like 200 years, and all the whole idea is sending messages so that people can put money in one end, take money out the other. That's literally what we're talking about, except now it's on a global scale. As you say, the unit economics are completely different because distributed database, right?
I mean, that's the same thing that Swift does. Like Swift
Yeah,
today is a way for like transfers to occur, but it is purely messaging. People
yeah,
don't realize that. There's no ledger changes, by the way. Like the ledgers all have to be changed manually once those messages are received by the counterparties. Like they
yep.
don't there's no automatic transfer. Like there's atomic settlement with crypto in a way that you do not get with anything else these days.
Yeah, it's now like I joke sometimes that like the robots are doing everything, right? And to some extent, robots are doing things, especially in Japan. Uh, but basically, just automating the process. And how big a total addressable market is that? It turns out it's absolutely enormous. Like,
Absolutely. Yeah.
like,
And I think like not to disparage like the way because I get the pushback from people of like, oh, but I can just use PayPal and I can automatically send something or Venmo, and I'm like, yeah, and optically it looks like those things are automatic, except that's not how it's actually done. You don't understand. Like if you do it over a weekend, by the way, that just sits there on their ledger, and they have to like transfer that amount out when it comes to Monday. Like they sit on risk, and has to pay for that? Well, you do. Like you will pay ultimately in the fees that you have to like pay for this stuff and all these kinds of things.
yeah.
It's just
And
optically you don't see it.
and then the chargeback problem and so on and so forth. You're absolutely correct. Um, hey, it's super interesting. Now, let's talk a little bit about prediction markets because um, I know in the United States of America there was recently an election, and
I've heard about that. Yeah.
yeah, it's somewhat common knowledge now.
Yeah. Some
And
people are talking about
there is a prediction market that runs on a blockchain or set of blockchains called Polymarket. Now that so
it. Yeah.
I've got a book somewhere about this, of course, about how polling started, maybe 120 years ago, like polling. And
That's why I like talking to you. You're like a polyglot. You have information, a little piece of information about everything.
I'm a poly something. Now, the poly market runs, I think, on Ethereum for certain, but then there
They
might
run
be
on
other.
Polygon, which is an L2 on Ethereum, but yeah.
Okay, cool. So a few different chains, right? And the prediction market was more accurate than the polling, which is kind of interesting. It's interesting because it involves distributed databases. It involves people turning up and saying what they think and putting their money forward, right? And going, here's what's going to happen. And for the most part, I know that there's some variance, right?
Right.
But the poly market was more accurate than the polling. Um, have you got your eye on what's going on there? Because that's quite an interesting dynamic. It's because it's not just going out and getting like a dozen people, maybe like we could representatively sample 100 people from Iowa, right? And say, what are you going to do? No. People like anywhere in the world can just go, here's what's going to happen. And they can use distributed database in order to do it.
Yeah, it's real time, it's instantaneous, and I think this is one of the advantages that you have with prediction markets compared to polling data. Because polling data, I mean, oftentimes it takes a week or 2 weeks, and they have to like call people or use, like these days, I think some of it's electronic, but like depending on that, like you also kind of shift your demographic a little bit in terms of who you're polling. So, I mean, we've seen that polling over the last few elections has actually kind of second guessed itself as well, and they're trying to like change how they're doing this because, and this podcast isn't going to be about like the how polling doesn't really kind of work anymore, but like they've tried to kind of refine themselves so that they are more aligned with the actual expectations. But this time around, this election, I mean, there was a massive gap between traditional polling data and what we saw in prediction markets. And to be fair, prediction markets don't have to be built on a blockchain. They're definitely like non-blockchain variants of prediction markets, but we've seen that prediction markets that do run on blockchains, like Polymarket that runs on Polygon, for example, I think demonstrated there was a lot more transparency, the speed was there, global access. And by the way, there were a lot of people who were using it in either to report the data or just kind of like look at what's going on, who didn't even know that this is blockchain related. They didn't have any clue that this had any blockchain foundations whatsoever, which is finally, in my view, great. That's awesome because I mean, that's how it should work. You should just be able to use this stuff and not have to know that there's blockchain running in the background.
Yep.
So I think that it was a great example that you could actually have dispute resolution, automatic payments, settlements on outcomes, and all of it could just be done automatically. And that also set it apart from these non-blockchain variants that work, but I think probably just aren't as efficient as what we're seeing with decentralized prediction markets.
There's a piece here that's interesting in my opinion, and I, of course, welcome your view on it. This idea of distributed databases was the idea that information would be shared, right? And it's transparent. There's also a piece around, in this case with prediction markets, that kind of put your money where your mouth is, right?
Right.
And that whole ethos, which is kind of open source ethos, actually, which is kind of the origins of not quite the internet itself, but certainly in the 1990s cypherpunk thing. Like, that's happening. Like, and what's interesting is to watch the quantifiable outcomes of that set of decision making amongst people who, while they might not be literally next to one another, though they could be, there they are sharing information. And it turns out that the kind of hive mind thing is better than the polling. So there's kind of an interesting circumventation of the way decision making is made. And yes, as you say, like it doesn't require anyone to understand PGP, public private key signing, hash functions and things. No, it just works. Like,
right. I mean, in part because the participants who are on Polymarket are incentivized to do their homework because there's real money on the line. Whereas when a polling person calls you, I mean, like, I'm like, yeah, I think I'm going to vote for X or Y, but you may not have done your homework and you might not follow through with that once you actually did, whereas you will do that when you're on something like Polymarket.
Yeah, it's all about incentives. It's very, anyway, I've got a book somewhere about it. Let's move on to the next point because you and I can talk forever. But number three, infrastructure.
Yeah.
So we have a number of different competing networks. For the listeners' sake, Bitcoin, Ether, well, the Ethereum network, Ripple, Solana, Avalanche. It keeps going down the list, right? What's
Right.
going on in the infrastructure side? Because they are competing networks. And of course, they've got different dimensionality, really. They've got different ways in which they compete against each other. What are you seeing there, and how do you think about it?
Yeah, I mean, this was one of the big themes that we saw in the last bull cycle, like, and that was really when the prevalence of these like alt layer one networks kind of came about. And when we said alt L1, most of the time we were thinking about like alternative to what? Alternative to Ethereum, because that was the big smart contract platform. I mean, at the time, but also still now. I mean, like if you look at market cap, it's still like dominant post after Bitcoin.
Yep.
But like there's so much in terms of new L1s competing on like lower transaction costs, just redesigning execution environments, minimizing latency. And these are all great things because, I want to see that we are iterating on and trying to build out. But it's getting to this point now where there's an excess of what I would call like generic, quote unquote, like block space compared to premium, quote unquote, block space. Because I think premium block space still kind of remains scarce. And what I mean by that is like there's all this additional block space that we have because we've been scaling out now, but all of it's not inherently more valuable just because it exists, right? Like you need to have like a vibrant protocol ecosystem where people are actually like using this stuff. And I don't care what you're using it for. Like, let's say it's Solana and people are trading meme coins out of it. Well, that's still an active community. And that makes Solana or Sol a very dynamic crypto asset. So it's enabling those blockchains command a fee premium in a way that maybe some other blockchains are not. But I think we still haven't quite settled on like what the ultimate winners are going to be. Is this going to be a multi-chain future, which I do still think is very possible. I don't think this is just a like winner takes all kind of scenario. Like maybe it will be winner takes a lot, winner takes most, maybe like even. But I think that the future still needs to be multi-chain because these blockchain architectures all offer different advantages and disadvantages, and that suits different needs that people have. So I think that that's what we're going to see, these kind of like more tailored experiences that are going to cater to different users as we get into the future.
Okay, you've beaten me to the punch there because I was going to ask you whether you think it becomes, because people have told me for years that it's winner take all, right? Network effects, Metcalfe's law, and all that. And we haven't seen that. Having different chains competing against each other is actually quite a healthy dynamic. However, it comes with the shortcoming that it divides resources. But your view is that, well, I'm in agreement that like multi-chain future, there's always going to be someone doing something and trying to usurp, right?
Right.
It hasn't played out fully yet, but thinking about diversifying across them if one were an investor, that's probably the best idea because like you don't know who's going to win. A, B, once the network effects kick in, things become very powerful, like Bitcoin or Ether for that matter. Now, let's just quickly do a little tangent. Not tangent, it's kind of a segue into layer twos. So you've used the terms layer two and layer three in the course of our discussion, right?
Right.
Now, everybody wants their own layer two. Um, do you have a view on whether that helps or hinders, particularly the Ethereum ecosystem? If everyone's creating an L2 and the fees are going to the L2s and they are eventually paid on the Ethereum layer one, right?
Right.
Um, which has to be paid in Ether. Now, which drives demand for Ether and so on and so forth. Do you have a view on like whether that's a good or a bad thing, and it's not binary. It could be kind of um, fuzzy logic, really. Do you have a view on it?
I mean, in large part, you have to kind of accept the premise that this was part of the scaling roadmap was necessary for a reason, right? Like this was Ethereum's way. Like, I mean, once upon a time it was sharding, but like once the L2 experiment kind of took off, like L2s were the way we were going to scale the Ethereum network because otherwise, how are you going to get all the things you needed on the chain? And by the way, like it was too expensive to do everything on the native L1. So you kind of needed the L2s to kind of support like the cost. So regardless of whether it is extractive or not, and I don't think it is, by the way, I mean, it was necessary. So that's the first point I would make. But we also saw that, the Denkun upgrade that we had in March of this year also introduced that new transaction type to Ethereum in the form of blobs or binary large objects. And that also, like, it did L2s a favor because it supported that, the need that L2s have for kind of increasing data that they were sitting on. So it lowered the costs on those L2s by like 90%. But it also kind of meant that for for Ethereum itself or the ETH value, a lot of people kind of pointed and said, well, you see, like it was eventually going to extract more value onto the L2s than it would on ETH itself. But like that would have been the case for if you had kind of approached any kind of scaling roadmap, to be quite honest with you. I mean, that's just the nature of scaling. I don't think it means that like we are seeing this kind of movement from the L1s onto the L2s, and that's where all the value accrual is now, and that's just going to be the way it is forever. I mean, like in large part, I think what we saw with ETH, and certainly things have changed over the last few weeks alone because ETH has, at some point crossed back to like 4,000, 4,100 over the last 2 weeks. But I would say that, like ETH has also kind of been affected by being over-indexed to the ultrasound money thesis in a lot of ways. And so it's kind of a victim of its own success because for a long time it was deflationary and it kind of flipped to inflationary. And even though that inflation is still fairly low, the fact that they were saying like, well, we told you it was going to be deflationary and now it's inflationary, that's a problem. Well, that was never what they said. They just said that it was going to be dynamic, that it was going to move and things were going to shift. And that after EIP 1559, when like they introduced the burn, you could potentially see deflation, which is what you got for a while. So I think that those are the factors that kind of led to it. But I don't think this means that like ETH doesn't have any value in and of itself because the L2s exist. Like I very much think that the value accrual to ETH is just shifting now to other things.
Yeah, it's kind of a symbiotic relationship in a way. Kind of one feeds the other, and it builds something that's greater than the sum of its parts. I mean, because it's open source software and like anyone can launch an L2, right? Like it's it's really interesting because it's drawing in more people. Um, at the same time, the distribution of fees, that is to say revenue, changes. And I think it's a really interesting idea. It's not one way or the other. That's why I say it's fuzzy logic, right? Like it's not binary. Like it could, like anything, like well, not anything, but some things, you got trade-offs. And watching that ecosystem evolve right in front of our eyes is absolutely fascinating. I know we're going way over time, which is good, because we've got the last piece here, which is the one that I really wanted to speak about, which is around user experience, things like account abstraction and whatnot. Uh, because it's quick, 20 seconds. So when people use email, right? I remember having to configure email servers when I was younger, and I know I'm getting too old.
I
But I remember configuring email servers, and it was
Yeah,
an absolute pain, right?
I
And you
remember
had to
that. Yeah.
understand how to do the SMTP or the POP3 or whatever. And then Hotmail comes along, right? And then suddenly you don't have to configure email servers. You just open the browser and there it is. Of course, Netscape has to come along and Internet Explorer after that, and then the antitrust thing. Anyway, there's something going on here where user experience is starting to be prioritized, which means don't have to handle private keys.
Yes.
I'm talking too much as always, but like I know that you're keeping an eye on it, and your thoughts are definitely more useful than mine.
No, I think you're right because like the internet experience that we have today, I mean, it took a lot to get there, right? I mean, like I'm showing my age, but similar to you, like like I remember when we like started initializing SSL and HTTPS and OAuth and then passkeys, and all these things are why the security experience that we have with the internet is as seamless as it is. But we got there through incremental steps. Like today, we just kind of open a browser and we use it. But like it took all those things because once upon a time, I remember when I would not want to put my credit card on the internet because it would just be stolen. And like if we didn't have that, we wouldn't have Amazon today. So I think that user experience is definitely the key because to get to mass adoption, you kind of need to be in a world where all this stuff is just easy to use. And I know that like you were talking earlier about your cypherpunk roots that people have. And historically, that's what crypto was rooted in. It was focused on that like deep technological kind of onboarding. But I think now we're like just rapidly shifting to a place where we just want to have a simple user experience. Like I would say one of the things that we've seen in the cycle is like there's less people who care as much about decentralization as they used to. A lot of people just want to be like, I just want to open an app and I just want it to work. And so I think there is this sector-wide push to just abstract the technology aspects of crypto, put it into the background, let like the apps kind of handle the payments, for example, and just use this stuff. So I absolutely think that's where we're going.
Quick story. I think the listeners remember this one, but I'm going to say it again with you, David. Do you know about the history of PGP? Pretty good privacy?
Let's pretend I don't.
You definitely do. Uh, so PGP for encryption of emails was an absolute pain to use. Uh, Even cybersecurity people like me, like, really, I've got to like recirculate my keys and all this. Ugh. Anyway, we're speaking right now via this platform. It is encrypted end to end. Neither you nor I have had to manage the keys. It's just baked in. The same way with WhatsApp, the same way with Signal, any messaging app, really. It's now in there, except Telegram, which is problematic, but that's Telegram users' problems. At a certain point, when we abstract away from the technology, right, it becomes more usable, as you said. And then suddenly it goes from something that like is a hobbyist thing into mass market, right? And I think what you've said is correct. That what's happening right now with things like what's called account abstraction, uh, suddenly people aren't going to care about um, how hash functions work. They already don't care.
True.
But what they will know is that it's faster, cheaper, more convenient, and accessible, and it works globally, right? Uh, that is the path we're on. And if you're going to pay your fees in Ether, which is the demand for Ether, by the way, or you're going to pay with Bitcoin Lightning, shout out to Elizabeth, uh, that's what's going to happen. And people are just going to use it because it's better. But there's a lot of steps along the way, right? And it's really positive that these steps are being made. It's just someone has to do them. Um, anyway, we're way over time, but that's good. Uh, any
Yeah, that's my
thoughts?
fault. I'm sorry.
No, no, no. I've been talking too much. So I know we've been talking about Coinbase's 2025 outlook for institutional investors, which will be released imminently.
I think by
All
the time
those
this
thoughts.
podcast airs, it should be already available.
Yes, yes, you can find it at your best Coinbase 2025 Outlook purveyor, folks.
Or just Google it or ask ChatGPT. I'm sure it'll pop up.
No, ChatGPT won't do it because ChatGPT's data set, training data, is from
Like,
2 years ago.
yeah, I was gonna
So
say
it
it
won't.
ends probably in like April 2023 or something. Well, it depends on
Yeah,
which model you're using. Yeah.
you get it from 2 years ago, but the space moves very fast and changes very quickly. So don't use ChatGPT for that. David, usually when we finish these episodes, we talk a little bit about what's interesting or what you think's the future. Obviously, your outlook is what you think the future is, but I'd invite you to share any thoughts with the listeners about what you find interesting, and that could be in this crypto digital asset space, or it could be wider. It's really up to you.
Yeah, I think that the big themes we're going to see in this cycle are still going to be stablecoins and tokenization, and they've been pervasive even over the last year or so. But we've really seen that pick up from a lot of institutions who want to try to like make this work and use those rails. So I think that that's going to be the cornerstone of what we're seeing, develop on this side of things. But when I think bleeding edge, like stablecoins, great, obviously has product market fit, but I really kind of want to see what we're doing with decentralized physical infrastructure, DePIN, for example. I've mentioned on this call before, but I think
Yep.
there's like new projects out there. Gaming's now kind of has new games out there that are incorporating crypto elements to it, which is kind of a new model compared to the play to earn model that we had previously. That's going to
Yep.
be really interesting. I do think that smart wallets are going to be more ubiquitous in 2025. And all this kind of falls under the umbrella of like none of this would have been possible unless we had the regulatory environment that we will likely be in 2025, which is something more amenable, something where we're going to get a real framework in place, which I think could actually happen in, if not the first 100 days, within the first year of the new administration. So that's really something I look forward to, because once that happens, then like this is where all the changes are going to be, because right now no one could do like perpetual futures trading in the US. That could change over the next like year or two, like, so I think that there's going to be a lot baked in to what's going to happen on the regulatory side.
One of the things that I kind of toy with as an idea is the extent to which regulatory approval of things is required for people to use the technology. Now, I am not saying, to be very clear to compliance, I'm not saying like regulations are a bad thing. I'm saying actually like all fine. On the other hand, I was back in Turkey 3 weeks ago, and people are already using the technology. It doesn't matter. They're going to use it anyway. They've got cell phones, right? And it's open source software and distributed databases and things. So while I'm not coming down either side on this, I find it interesting the idea that people are using the technology anyway. It's globally accessible. Most people have got cell phones now. More, Jason, my colleague, he says there's more smartphones than toothbrushes out there, right?
Yeah.
Now, I don't
I
know
don't know
who
if that
does.
is that true. I don't even
I
know.
don't know who does the audit of how many toothbrushes there are out there, but smartphone penetration is now like approaching 100%, right?
Yeah.
So, you only have to subtract the number of people who don't have toothbrush, but maybe they don't brush their teeth, so they don't need one. Well, they need one, but they don't buy one. Anyway, the point is, people are already using the technology, right? And as you said earlier, we've watched it with the stablecoin thing, which is the killer app, as you said. And it turns out there's enormous demand for US dollars out there because I don't want Nigerian naira, or I don't want Argentinian peso, or I don't want Vietnamese dong or something, right? Like, I think this is going to be really interesting to watch play out, because I agree with you that like if that framework's put down in the United States of America, good, right? Then there's some certainty. On the other hand, the United States population as a proportion of the world's population is about 3%, I believe. I might be off by 1 or 2%. Anyway, it's a minority. The world's population is at least 95%. And I've seen, as I saw in Turkey the other week, people are already using the technology. And it turns out it's an absolutely enormous market. So anyway, they're my 2 cents, but I give too many 2 cents to use poor English.
No, I think
Nice
it's
one.
great.
Well,
Yeah.
David, thank you so much for joining me. Listeners, Coinbase 2025 report outlook is coming. And David, it's always nice to have you here, but I'm looking forward to our next time.
Absolutely. Thanks for having me.
Well, there you have it. David Duong, Head of Institutional Research at Coinbase. US listeners, wisdomtreeprime.com, Apple, Android app stores, if you're a US listener. Otherwise, if you are or are not US listener, you can find me on the Bird app at Benjamin Dean. Thank you very much for listening. It's always nice to have you here, and I look forward to our next chance.